Welcome to the VetPractice Playbook, brought to you by VetPractice Pro, where we talk all things veterinary leadership, management, clinic ownership, and more. I'm Dr. Emily King, joined by John and Kayla Biddles and Richie King.
Hello.
All right, we're starting out today's episode with a word that makes a lot of people in veterinary medicine immediately want to tune out, and that's, well, I guess it's an acronym, EBITDA.
Yes.
Excuse you. For EBITDA. So for a lot of people, including myself originally, I had no idea what EBITDA meant. It just felt like corporate talk, basically, or math, or somewhere in between. I don't know.
Both. Yeah.
You know, and I think that today's podcast is about, as an employee, why should you care about EBITDA?
Okay.
That's what we're talking about today. So we need to know what EBITDA is to start with, right? So do you want to inform everybody about what it is and what it's not?
EBITDA is earnings before interest, taxes, depreciation, and amortization. And if you want to
say it one more time,
earnings before, I have to look at this, earnings before interest, taxation, depreciation, and amortization.
Okay.
And the reason that breakdown is important, if you just take each one of the acronyms, earnings, net income before interest, which would be interest expense on debt, taxes, and you can't really depreciate taxes, so that's more like an S corp kind of thing. So that usually, if you're an LLC, even if you file as an S, it doesn't really come into play because you can't deduct them. Depreciation, that's a non-cash expense item. So whenever you're analyzing financials, one of the first things you do is add back depreciation, because that's a non-cash thing. It reduces your net income and your tax liability, but it's a non-cash item, so it means that's why you have to add it back. And amortization is any amount of monies that go toward debt, the principal portion of debt. So the reason that's important is if somebody comes up and comes in to buy your business, they're buying assets. You have to pay off all the debt with the proceeds. So they are buying a blank slate. So the reason, if you want to make the numbers easy, if you're buying a business for $1 million, you don't want to come in and have all these other liabilities associated with the organization that you're buying, because otherwise you wouldn't be paying the same amount, because usually the purchase price is a multiple of the final EBITDA number over a period of time. Say it's, whenever you're looking to buy business, you look at the past three-ish years and trailing 12-month financials, things like that. So it's basically cash flow. It's how much actual cash sort of that the business is throwing off.
Okay,
minus the uncontrollables.
Right.
Which
actually then is a measure of the business's stability, right?
Or financial health. I mean, if you're EBITDA,
financial health of the practice.
Years ago, there was a lot of talk in vet med about NOLO practices. And what that meant was that you had a practice that showed on paper they were making money, but if you were to normalize the financial statements, you were like, you're basically just working. You're self-employed, but you're working for your own job. So if you were to go in and replace, say, that some of that labor that wages that the owner was just taking from net income, it's not really making any money. And so that's where the term NOLO came from, because there was basically no net income to speak of. And with no net income and almost zero EBITDA, the value of the business is basically zero, except for the assets. The value of the hard assets included within the business.
So EBITDA is not the owner's take-home pay.
Not necessarily.
Not a secret stash of money, nor is it a judgment of how hard individuals are working.
But let me back up. It could be what the owner takes away, but that's okay, because that's the return on the investment they've made in the business.
But it's not the entire.
No, but what I'm saying is, if I were to buy a business, the reason that EBITDA is important is because, and going back to my example of $1 million, let's say it's throwing off $100,000 a year in EBITDA, it's a 10% return. That's why they have that EBITDA number, because if I'm writing a check for that, that business for $1 million, I
expect a return.
I need a return. Yeah. So that's, and in a roundabout sort of way, that's the way the owner looks at it too. It's an asset within their portfolio. So you would say, what is this actually throwing off every year? Now, they're going to take some of that money and reinvest it. There's all kinds of nuances within that, that qualify what that number is. But that's not, EBITDA is not a bad thing. It's a good thing.
So if EBITDA is low, then clinics often feel chaotic. because they're short staffed a lot of times, right? If they're low, then if the EBITDA is low. So clinics with poor EBITDA could.
If they have poor cash flow, I would probably qualify that and say if they have poor cash flow, if they're in more of a no-low kind of thing and it's hand to mouth, that you're running everything to zero every month, that's a problem.
Yeah, you're always reacting. You're always behind. Right. You're probably short-staffed because you have no wiggle room.
Right.
Right. So no margins for mistakes or growth.
I think it's really important for. I don't know. Go ahead. No. I just think it's important for employees to understand the fundamentals of how business works and where they fit within those fundamentals. Because if you're going and saying, I want this or I want that, whatever it is, I mean, if you understand that so much of EBITDA is just a math problem, that, if your top line number is this and then your expense structure is X, then it's really hard to, give somebody double their wages, for instance. I mean, that's outrageous, but I mean, that's something to consider is it just doesn't fit within that model. Because in order to preserve that EBITDA percentage, you have to keep your expense structure within a certain range.
Quick pause to tell you that VetPractice Pro is officially live, and it's designed for veterinary professionals and practices who want practical tools, not fluff. Right now, there are 15 on-demand courses covering leadership, human resources, and customer service, and more, plus over 40 downloadables and 10 ready-to-use SOPs. And the best part? We're adding new courses and SOPs every single month. So it keeps growing right alongside you and your team. If you're looking for education you can actually put into action for yourself or your practice, visit vetpracticepro.com. Right. So as an individual in a clinic, how does EBITDA show up in your daily experience? What do you guys think? What are some examples that it might show up?
You can't afford a certain piece of equipment.
Okay.
You can't afford to hire additional staff members. A lot of that comes down to pricing, I think, because everything's driven. This is the thing to remember: everything's driven by your top line number. If your top line number is where it should be, then all this should flow down, and your EBITDA percentage should be healthy and should be within a range that gives you options. And I think if it's not, then it removes those options. But a lot of that comes down to your top line number, where that's at.
Do you guys have anything to add?
I think there's freedom in finance, and I think that the more
I like that freedom in finance.
Yeah, the more margin you have financially, the more we like to say at VPP that if you're not trying hard enough to fail, you're not trying hard enough. To bring in new ideas, to bring in a new position or a new role. For instance, I think All Star had pretty much a family care, staff care type position that was responsible for sending people flowers or cards and things for euthanasias or holidays or birthdays that made it personal. If you don't have this flexibility in your margin, you're going to find yourself in a monotonous circle of what you can do, and that's what it's going to be. And so when it comes down to how you get control over that is going to be completely important, but you're going to see it every day, and you're going to see it on how fast you can move to achieve those small nuances that you as an owner want to be able to do. You just don't have the margin.
Yeah. I think it's like the circular argument.
Right.
People are chasing their tail a lot of the time. I'd love to have that community support specialist, but we can't. Yeah. We got to get to this spot. And, it's like, well, what are we doing to get to that spot? Well, no, I don't have time. I've got to see these appointments. Okay. We want to have that position. I mean, it's just like this continual, circular, like hamster on a wheel or on a treadmill. You're on a treadmill. You just never get there.
It's the analogy of, man, I don't know about y'all, but I literally I've been on the struggle bus part of my life. But anybody ever go to the grocery with a list for about $250 worth of stuff and $100 in your pocket, and you got to prioritize what you're going to eat? Guess what? You end up eating a lot of spaghetti, a lot of peanut butter and jelly. You got one ply toilet paper. Ain't nobody like that stuff. But that's what you have. That's what you get. And then the next week, you have to reprioritize. Nobody likes to be in that position where you have $250 worth of necessities and $100 to work with. And that's what I feel like if you don't have a whole entire business that's focused on the profitability of it, that's where you end up. You end up coming into work every day working with $100 worth of stuff when you need $250.
Yeah.
And I think that brings to mind the struggle that a lot of business owners face. I mean, it's hard. I can tell you it's hard. So, I mean, you do deserve that return. I mean, you do deserve that comp to make up for that struggle and the time and effort and risk that you take with, starting an organization or whatever. And it's not an easy thing to fix. I think that, well, I shouldn't say it's not an easy thing. There's no magic bullet basically if you just do this, I mean, it's comprehensive in order to address those issues, from pricing to expense structure management to the way, the systems you have in place in your organization. But it is fixable. And I think that I like to say there's always opportunity behind every problem. So to the extent you can look at those issues and say, I'm at 10% now, I really want to be at 20 EBITDA percentage. What do I have to do to get there? And then work backwards and then figure out over a reasonable period of time to get where you need to be. You'll be glad you did.
And this is one place where, we've talked about pricing and price changes and, which occur every year. And as an employee, you need to be on board for those price changes and price increases, because it is what is allowing the EBITDA to either stay stable or increase. Mm-hmm. And when it doesn't increase, then you see lots of trickle down, and it ends up affecting you on a ground level as an employee. There are some things that we wrote down that are places where you'll hear people say things like chronic short staffing called it's lean. We're keeping staffing lean, in order to save money. Or listen, why don't we skip lunches today because we got to work through and make this happen? Stretch supplies, delayed maintenance. Oh my gosh, that's something that just, how do you, again, it's the whole hamster wheel thing. If you don't get your dental machine fixed, you can't do dentals.
Yep. In areas where margin lacks, procrastination flourishes.
Mm-hmm.
You keep kicking it down the road. And it keeps snowballing and it gets bigger, and then you become stressed, you become burnout. It's just all a big snowball effect.
I think too, it's important for leaders to communicate some of these principles down to the staff members so they understand the logic and inherently appreciate where they're coming from. If they'll say things like, I want to do this, I want to be able to provide you this equipment, but in order to do that, I have to be able to charge X. So I need you to be an advocate for that price structure and convey the value to the clients that need to be conveyed so that they understand it. And I think it's very tough, but I mean, I get it, but I think it's really important for them to understand that. So it's not just an abstract, into the ether kind of concept that they just show up and they get paid this and that's it. If they understand their greater role in the organization, I think it makes a big difference.
Yeah, absolutely. Okay, so we kind of wrote this story here as an example because I think poor EBITDA, people think, well, we just need to see more patients. And that's not actually, that could be one focal point or one pillar. But there are so many other places that I think people forget where they can make a difference in EBITDA. So I'm just going to tell the story really quick and then we can talk about it. So there was a clinic I worked with where everyone was exhausted and not just busy season tired. I mean, bone deep, short fuse, Sunday night, dread, exhausted. They were always short staffed. Equipment was constantly breaking. The schedule felt impossible. And leadership kept saying the same thing. We just need everyone to hustle a little bit more. So the doctors tried to see more appointments. The techs skipped lunches. People covered 2 roles at once, and everyone felt guilty for being tired. But the people weren't the problem. So when you finally looked under the hood of the clinic and looked at the financial picture of the clinic, they had poor EBITDA. Not because people weren't working hard, but because systems were leaking everywhere. And so here are some common places that we will see the leakiness happen. Mischarges. That's such a big one. Oh, and it is one that is like, will make me want to stab my eyes out. There is nothing worse than doing the work and not getting paid for it. Yeah. And not because the owner didn't pay you or wasn't willing to pay you, because you forgot to put the charge on the PVL. Mm-hmm. Like, that is, oh my gosh.
Guys,
oh my gosh. She's twitching. Oh my gosh. I'm twitching. It is so.
That's so invaluable that we actually had somebody at All-Star. That was their full-time job.
That was their full-time job. And then you multiply that times 11 doctors, 12 doctors.
That's funny.
How many missed charges?
Yeah.
And then we would track that over each month. And people actually, when we developed the process then for not missing charges and then reporting on missed charges, people took that personally. Yeah. Those doctor groups, they wanted a 0 report. I just heard Dudley on the phone yesterday when I was in the clinic. She was like, hey, I didn't get it. She's leaving a Vocera message for the Faust team to Dr. Faust. Hey, Dr. Faust, I wanted to let you know you're not going to get a monthly report on your desk because you don't have one. There's no missed charges. And they are ecstatic when they get that message.
That's great.
And so that is huge.
And they have
one thing.
Yeah. And they have a vested interest too, because a lot of their comp is tied to production.
Yeah.
Well, and if you have, if you can sit there and look at it and average out, annualize, hey, we're missing $150,000 and missed charges, but I can pay somebody $50,000 a year for their full time. That's a net growth of just hiring somebody just to do that. The job pays for itself, and you've added $100,000 to your EBITDA.
Yes.
Yeah. It's a big deal. I mean, it really is cumulative. It's a very big deal.
Well, you're doing the work. Like, that's the
Doing
thing.
the
Like,
work.
you did it.
I think that's why I was just like,
Well, I say that to say a lot of people say, hey, I don't have the margin to hire somebody for this.
Right?
No, you do.
You actually do.
You
You
have
don't.
a broken
Yeah.
process and broken system that you can make $100,000 just by hiring somebody for this.
The other thing I'd like to add about this is, and it's not explicit in the notes, but I think when everybody is always running around with their head, like their heads are cut off, I think there's a perception from a client standpoint of a downward pressure on value. You have to be really careful that things don't look insane. We've all been to places you're like, holy smokes, what's going on here? This is, it's a train wreck. And I think that if it looks like that, if the employees feel like that, I guarantee you the clients at some point sense it. And you have to be careful. You have to be careful that you don't let that bleed over into a downward pressure on the value add that they see.
another place, inventory waste.
Mm-hmm.
Oh my gosh. If you are a person listening and you have 5 heartworm preventions in your pharmacy cabinet,
if you're not turning that,
you need to go listen to Richie's inventory talk.
That's the one thing that
it's just sitting there.
It's an unforced error. It's just a complete unforced error. And I think that if you're going to tighten up anything in the clinic, that is one thing that you could tighten up and get that number down to where it needs to be. Because I mean, if you're a clinic of any size, any size, it doesn't matter. I mean, every percentage of revenue you can save through better systems, efficiencies, it's golden.
Mm-hmm.
Doctors doing tech work.
Yes.
We had a doctor who just, because of the system she lived in before coming to All-Star, would go back and participate. And I mean, literally, we had to slap her hand. Stop doing that.
Yep.
Like, you have people to do that. You're more valuable calling that client with lab work. Yep. Doing a procedure, doing a treatment, doing a whatever. And again, we're going to hear, we just don't have the money to hire technicians. You do. You absolutely do. You need to. You don't want to give yourself the choice of not having them and thinking that it's just easier if we just let the doctors do it. Let the doctors restrain for x-rays. Yeah. Let the doctors put in
But the doctors
catheters.
could be doing something way more valuable while the technicians are.
That generates revenue.
Yeah. That generates revenue.
As you hire employees, you need to decide, does this position pay for itself or not? And weigh that out. And I think that you'll find, if you really break down whether it be time studies or inefficiencies, that you should be hiring people in positions that pay for themselves. Whether you add an assistant to a cohort like you guys do, you have like this cohort pod model. Hey, if adding assistant to that generates X amount of appointments without increasing burnout and stress, I have to pay for a person, but the total ROI is sitting there, just like the example we just used. And I think people fear that don't have margin. You're constantly in the mindset of, I don't have enough.
Yeah.
And you won't take any sort of risk to get yourself that ROI that you want. And this is where me being very passionate about lean and Six Sigma is eliminating these inefficiencies.
And it's not just people; it could be systems or tools. You guys brought Vocera to our attention years ago as a communication tool, and it was golden. I mean, we did the math, and I was like, "This is more than pays for itself." So it's not always just people. You could have, replacements. I mean, for things, you could hire somebody to run around the clinic and do that all day. But this is it's a much better solution that we found.
And then the last one, techs doing CSR work. Yeah. Right. I mean, we try to avoid that with that all possible. We actually even took technicians out of exam rooms from taking histories because, again, pushing their skill set to something else. What can only they do? and that's another very powerful place as well from a workflow perspective and productivity.
I just did, if it's okay, I'll share a great example that I literally just finished a project on or finishing at the hospital. In the recovery room, everybody has a we call them rovers, like computers on wheels, and workstations on wheels. Well, there's multiple systems that we have to log into, like 4 or 5 at minimum, to be able to function in the role. Well, I talked with the staff, what can we do to increase efficiency? We need tap and go, where you just scan your badge, it logs you into all the systems. We did a full-time study and found out that we spent 692 RN hours annually just logging in.
Wow.
That's
just
crazy.
logging in.
Yeah.
So then I took that and multiplied it out by the average nurse salary, and we were spending a stupid amount of money every single year just for nurses to log in. Went to a computer in the hospital that had tap and go, did the same time study, did all the math. Not only can we get the tap and go for like $1,800 is all it cost, it's going to save the department $10,000 to $15,000 a year of nurse efficiency and hours logging in. Over 400 nursing hours spent just logging in.
Yeah.
So this is money back to EBITDA. This is money that goes back to the organization, whether it be the owner's return on investment or whatever. These inefficiencies, I don't care who you are, they exist.
Oh, yeah.
Practice. You got to find them.
And that's not a new concept. I remember years ago when I got out of college, I worked for a company. This is pre-internet, pre-email, everything. And when I got there, it was basically all DOS-based, where you had to do F1 and all this other stuff. And they said, when I first started, one of my managers said, we just had a guy that came and spent a year going from office to office and looked at the actual keystrokes that people used within. They had a proprietary, it's called Swift, and they cut that down by like 80%, so they could make more phone calls and get to more screens faster. And so it's an amazing concept. I mean, it's very applicable to today's world.
When efficiency leads to more productivity, you have less burnout. People like to be able to do more efficiently than have to do all the busy, tasky work. It'll help your culture.
Absolutely.
And then they feel like you're for them. You're trying to make their job easier.
Better,
But honestly, guys, if you're leading the practice and you're on the back end, it's a win-win for you.
Yeah.
You're generating more revenue. Your employees are happy because they're functioning efficiently. Everybody should be working at their maximum capacity without all of the hub-a-dub BS that you have added in there of difficult processes.
Right.
Yeah. So as a non-owner influencing EBITDA, these are things, and we just talked in the last podcast about leading up, and these are great places to look to lead up. So reducing rework, so duplicity, eliminating duplicity, supporting clean workflows and processes, improving charge capture, that's huge, right? Communicating clearly with clients, using staff at the top of their licenses, which we talked about, and then trying to develop processes that prevent drop balls. Those are all places that you could intervene and lead up and create solutions that then is going to improve EBITDA.
This just popped into my head. When I worked at a bank years ago, they had an incentive system that was at each branch. If you saw a problem and documented the solution, sent it in, and they implemented it, you got a monetary reward.
That's what we put in place. I mean, I don't know if you guys still do it at All-Star, but I think we took your idea.
Okay, yeah.
And essentially, have a form for them to fill out, and the
if it
best
gets implemented.
The best one who has the best ROI got a cash prize, or
it's golden, because the people in the trenches see the
issues.
Called
the light bulb award.
Is that what it's called? Okay. But it was really, it's really a great incentive system. It's just a win-win for everybody, because it fixes the solution, it fixes the issues they're seeing day to day, but then the organization wins because of greater efficiency.
Look at your copy machines. Those things sucks on finances and you don't even realize it. I've read studies where a kid at a college reduced the basic font size from 12 to 11.
Oh, wow.
I think if you've noticed that, Word went to
defaults.
It went to a default of 11. It was because the amount of copies, it saved thousands and thousands of dollars just because it condensed everything. Same thing goes. A lot of people who contract their copying, they charge X and like 25 cents a copy for color and 10 cents for non-color. Well, if your computer defaults to color and you click print, even though there's no color on it, you're getting charged the full 25 cents for a color copy.
Wow.
Right.
Because that's the way it was sent to the printer.
Right.
But people don't look at this. They just write the check for the bill on their copy machine.
Right.
There are things like this that exist
everywhere.
And if you can get to circle this back to the point of the podcast, is that if employees can buy in on this and you can get them to look through that lens to find some of these inefficiencies, because high level leaders aren't going to know the copy machine stuff. But if your finance person who's responsible for paying the copy machine bill, or the person who prints all the copies is trained to look through these type of eyes and value EBITDA.
Right.
This is what we're saying as an employee. This is why you should value it. That's more return for the clinic and more ways that you can incentivize people for light bulb awards, for great ideas, for jobs well done. And I'm sorry, if your clinic owner is doing okay and your staff are paid well and everybody's paid the way they should and you're running efficiently, everybody's happier. So everybody really should care about the profitability of your organization.
Absolutely.
Okay, so on to Playbook Replay. Are you ready for the question?
Yep.
I'm an associate DVM, and every time EBITDA or numbers come up, it feels like pressure to move faster or upsell. I hear this all the time on social media, that people don't like thinking about numbers, okay? I got into vet med to care for patients, not chase metrics. How do I care about EBITDA without compromising my values?
Okay.
Okay, so
how is it? And a better. Okay, go ahead.
No, let's dive into their question. Let's see how we can help them.
Because they're equating EBITDA numbers and your value system, and how do you reconcile that? How can you not have both? That's a better way to put it.
It's siloed in their question. You have metrics, and then you have pet care,
because it assumes that if you care for one, you don't care for the other.
Correct.
It's a Venn diagram. They work together.
They work together.
Right.
You have to have income and value to support the care, but you have to have the care to generate the income and value. You can't have one without the other. I think that's what you're getting at, right?
Yeah.
Well, and that's where that phrase came from, good business is good for medicine.
Yeah, I don't think. I don't think
good medicine is good business, I guess, is the other way to think about that.
And I think it's really important, especially at the DVM level, to understand how the business works, where you fit into that business, how your comp's figured. I mean, you do have a vested interest in making sure that the clinic is prosperous, and that then you, by definition, are prosperous because you're making what you need to make. I think it's also a systems problem.
Well, it allows you to develop good systems.
Yeah.
By caring, you're going to have better systems, which eventually is going to lead to better care. Like, I can tell you that because we have systems in place, we deliver way better care than we ever would had we not taken the time to be intentional about those things.
And more touches, more relationships.
Less balls dropped, for sure.
Yeah.
And it could be, and I'm not a doctor, so you can maybe speak to this better, but when you're talking about to upsell to these things, I think there is a gold standard that people, in terms of practicing medicine, where that's not bad. It's just the gold standard. So I think that's where it's very hard for me, because I look at some of these things and there seems to be an inherent conflict between money and the practice of medicine sometimes that I don't think should necessarily exist. And I think that it's an industry issue that really should be talked about more and addressed more frequently, because I do think you can reconcile the two, absolutely. But I think that it's not an either or necessarily.
I think you have to remember that if you're hired into a clinic, that somebody is going to own the business and somebody's owning the business. Granted, they could have very much a heart for caring for animals and growing people. That's an 8. If you're going to start a business, like, you want those things. But at the end of the day, you also want to return.
Yeah.
You also want to be wealthy, and you want to be well.
Well, you take home all that work every single day. You're thinking about it. It's never off. You never turn it off.
You're in charge of what type of lifestyle you want to build. And when you set out for that clinic, nobody's looking to make less money. And no business owners out there like, how can I make less money and do more for clients? Right. No, how can I do more for clients, see more clients, and make more money? They go hand in hand. But when you are hired as an extension of that business owner to help achieve their goals. I'm sorry, you are paid to help achieve their goals, whether that be personal goals for finance, whether that be business goals for finance. This is your role. And anytime you hire into, whether it be huge corporate or small business, you are a tool, hopefully a well cared for tool, but you're a tool to help them achieve their vision. And I really, really think that if you put yourself in their shoes, anybody who's been to school long enough to be a veterinarian should be able to put themselves in the shoes of a clinic owner. What would you want?
Right.
For you, for your family, for everything that you put into it. And what would you expect from your employees when I say, hey, we need to figure out how to do this more efficient. We need to be a little bit more productive. We need to do this. It's not necessarily about my pocket. It's about the whole big picture. And I think that you really, really have to link those things together.
And if you do not align with their core values, you will not, it will not go well. Like, you're going to feel like the bad kind of tool, right? I'm just here to make this person money, right? Their values are not aligned.
Yeah.
And so I think that's extremely important when you pick where you work, so make sure that you understand what it is, that you're buying into, because you do actually have to buy into it.
I think, go ahead. Sorry.
No, you're
I think it's really important. I think I said this off air before we started on some of these things. As long as you're acting ethically, professionally, honestly, and it's an arm's length transaction between the parties, I think there's nothing wrong with that. I think where you get into trouble is another job story. My first job out of college, I worked at a finance company for a while, and they did things that were less than ethical. And I always felt bad about that, because I was like, I'm actually not being as honest upfront and conveying to these people, or being told to do that, how really I would like to be treated. And I think that VetMed is not that situation at all. So I think that it's really important to draw that distinction and say, so long as you're acting within the bounds of professional ethics and the owners are making a fully informed decision, I think you're fine.
Okay. Here's a couple of closing points or key points that we should remember, or I guess that we want people to remember. EBITDA is a scoreboard, right? It's a metric. It's not a moral judgment. You can care about money and medicine, to your point of them being in separate silos, and why not? Let's combine them into one rather than keeping them separate. Financial literacy protects against burnout. Clinics fail quietly before they fail publicly. And understanding the numbers gives you influence, not obligation.
Oh, that's good.
Absolutely.
Okay.
All right, we're closing out?
Closing it out, I think.
All right, well, that's it for today's episode of the VetPractice Playbook. We hope you got a few plays to use yourself or for your clinic. If you enjoyed this conversation, share it with others, leave us a review, and check out vetpracticepro.com for tools and courses that can take your clinic to the next level. See you next week.
See you next week.
See you.